Welcome, ladies and gentlemen of the media, to the 91st and last Monetary Policy Committee press briefing for the year. On behalf of the Bank of Ghana and the Monetary Policy Committee, let me extend my appreciation to you all for sustaining this process. I present highlights of the discussions and subsequent positioning of the monetary policy rate. Global economic growth continues to be dominated by US-China trade tensions, unresolved Brexit negotiations, and geopolitical tensions which impacted crude oil prices. These developments heighten policy uncertainties, weigh down on business confidence, dampened investment spending and industrial production, and have resulted in a synchronized growth slowdown across major advanced economies. Growth in the emerging market and developing economies has also weakened slightly, reflecting the decline in global trade, mainly due to the trade tensions. Headline inflation in advanced economies and emerging market economies have remained relatively subdued on account of sluggish wage growth, lower energy prices, and contained underlying inflation. In response to these conditions, central banks in major advanced economies have pursued accommodative monetary policy to support growth. The U.S. Federal Reserve has cut rates on 3 occasions, with the last rate cut announced during the October 2019 meeting. The European Central Bank, on the other hand, has decided to keep interest rates on hold until inflation converges towards targets. These policy actions by key central banks have helped maintain favorable global financing conditions. On the domestic front, growth momentum continues to remain strong and has been sustained since last year. The bank's updated composite index of economic activity continues to show a steady pickup in economic activity. The CIEA recorded an annual growth of 4.4% in September 2019, compared with 5.8% in the corresponding period of 2018. The key drivers of economic activity during the period were port activity, domestic consumption, tourist arrivals, and DMB's credit to the private sector. Results from the Bank of Ghana's latest confidence surveys, conducted in October 2019, pointed to improved business sentiments. Business confidence has rebounded, due mainly to favorable company and industry prospects, positive growth outlook, and declining lending rates. Consumer sentiments, on the other hand, remain broadly unchanged from the previous survey. Developments in monetary aggregates are consistent with the trends in aggregate demand. Growth in broad money, M2+, remained strong during the year. In year-on-year terms, growth in M2+ was 16.3% in October 2019. Reserve money also expanded in the review period. Growth in reserve money went up by 26.1% compared with 4.3% over the same period last year. Commercial bank credit to the private sector has continued to improve. Annual growth in private sector credit was 14% in October 2019 compared with 11.4% for the same period in 2018. In real terms, private sector credit expanded by 5.9% compared with 1.7% over the same comparative period. The latest credit condition survey conducted by the bank in October 2019 pointed to an ease in the credit stance on loans to households. However, credit stance on loans to enterprises tightened, reflecting continuous efforts by the commercial banks to safeguard the quality of their loan portfolio through improved due diligence and credit risk management. The three readings of inflation since the release of the rebased Consumer Price Index by the Ghana Statistical Service show that inflation has remained below its central path of 8%. Headline inflation declined from 7.8% in August 2019 to 7.6% in September, and a slight inch up to 7.7% in October on the back of the recent upward adjustment in administrative prices of electricity and water. Looking ahead, inflation is projected to stay within the medium-term target of 8 plus or minus 2% over the forecast horizon. Inflation expectations for businesses, consumers, and the financial sector appear to be well anchored within single digits, despite a slight pickup in the bank's measure of core inflation. On the international commodities market, data shows that crude oil prices fell 3.8% on a year-to-date basis to close at an average of $59.8 per barrel for October 2019. The decline was on account of investor concerns about the unrelenting U.S.-China trade tensions and continued buildup in U.S. crude inventories. Gold prices slipped marginally to $1,490.9 per fine ounce after trading above the $1,500 per fine ounce for 2 successive months on the back of dovish monetary policy stance by major central banks. On a year-to-date basis, gold prices gained 18.9%. The average price of cocoa increased by 11.2% to settle at $2,475 per ton in October 2019. This was mainly supported by increased third quarter grinding data, which serves as a proxy for demand. These favorable commodity price developments, together with increased production volumes, impacted positively on the trade account. In the period January to December 2019, exports stood at $11.7 billion, while imports started recovering, reaching $10 billion. These developments resulted in a further improvement of the trade surplus, which stood at $1.68 billion compared to $1.55 billion in the same period in 2018. Current transfers improved, resulting in a further lowering of the current account deficit to $829.5 million compared to a deficit of $1 billion in the same period of 2018. The current account deficit was financed by significant inflows into the financial account, reflecting mainly the Eurobond proceeds and cocoa loan inflows. The overall balance of payments recorded a surplus of $878.9 million over the review period, compared with $757 million in the same period of 2018. Gross international reserves increased by $1.6 billion to $8.7 billion as at November 2019, providing cover for 4.2 months of imports. This compares with the end December 2018 position of $7.02 billion, which provided 3.6 months of import cover. The foreign exchange market has continued to remain calm since the sharp depreciations recorded in the first quarter of the year. As at November 21, 2019, the CD had depreciated by 10.4% against the US dollar, compared with 8.1% depreciation in 2018. Against the British pound and euro, the CD cumulatively depreciated by 11.2% and 7.4% respectively, compared with 2% and 2.8% over the same corresponding period in 2018. In trade-weighted terms, the real effective exchange rate continued to be broadly aligned with the underlying fundamentals. Provisional data on the execution of the budget from January to September 2019 indicated that the total revenue and grants amounted to 36.3 billion Ghana cedis, compared with the projected target of 42 billion Ghana cedis. The revenue shortfalls were from both tax and non-tax sources. Total expenditures, including arrears clearance, was 51 billion Ghana cedis, below the target of 56.1 billion Ghana cedis. These developments resulted in an overall fiscal deficit on a cash basis of 4.5% of GDP, against the target of 4.1% of GDP for the period. The primary balance also recorded a deficit of 0.3% of GDP, against a programmed surplus of 0.1% of GDP. The deficit was financed from both domestic and external sources. In line with these developments, the stock of public debt rose to 60.3% of GDP at the end of September 2018, compared with 56.8% of GDP at the end of September 2018. Of the total debt stock, domestic debt was 101.4 billion Ghana cedis, of which 11.2 billion represented bonds issued to support the financial sector cleanup, while external debt was 107.2 billion Ghana cedis. Money market interest rates inched up marginally across the spectrum of the yield curve. The 91-day Treasury bill rate has averaged around 14.7% since July 2019 to date, compared with 13.6% in July 2018. Similarly, interest rates on the 182-day instrument is around 15.1%, up from 14.4% over the same comparative period. Rates on the secondary bond markets have also remained stable, with marginal changes in yields. Yields on the 7, 10, and 15-year bonds went up to 19.8, 19.9, and 20.3% in October, from 19.3, 19.3, and 19.5 respectively, same period a year earlier. The weighted average interbank lending rate has remained at 15.2% since May 2019, having declined from 16.2% in October 2018. In a similar trend, the average lending rates compiled from the banking sector have marginally declined to 23.7% in October 2019 from 23.9% a year ago. The banking sector continues to be solvent, liquid, and profitable, and the latest stress test results conducted on the sector shows resilience to shocks. The industry's financial soundness indicators also continue to improve as banks adhere to sound banking practices following the reforms. The industry's capital adequacy ratio, computed in accordance with the new capital requirements directive under Basel II-3 capital framework, stood at 18.9% in October 2019, well above the 13% minimum regulatory benchmark. Asset quality has also recorded some improvements, with a decline in the non-performing loans ratio to 17.3% in October 2019 from 20.1% in October 2018. Adjusting for the fully provisioned loss category, the industry's NPL ratio declined further to 8.1% from 11.4% over the same comparative period. The industry's NPL ratio is projected to further decline as banks intensify loan write-offs and recovery efforts. Increased innovation and technological changes in the payment ecosystem have supported the bank's objective of promoting inclusive finance. Access to finance, especially among the unbanked segment of the population has improved on account of financial institutions and financial technology companies' joint deployment of mobile-based products and services. Currently, there are 16 fintechs that have partnered with financial institutions in the provision of mobile-based products. In addition, the completion of the mobile money interoperability project has supported the financial inclusion drive. Total value of transactions through the interoperability platform was 95.4 billion Ghana cedis in September 2019, compared with 32.6 billion Ghana cedis in September 2018. As at September 2019, total mobile money accounts in existence stood at almost 32 million, and this has provided opportunity for financial institutions to expand on the delivery of services to economic agents. Financial institutions are currently delivering digital credit and savings, as well as providing alternative digital channels for their customers with the view to making payment convenient and accessible. As a further boost to the development of the e-payments ecosystem, the Bank of Ghana, in line with Section 10 of the Payment Systems and Services Act 2019, that is Act 987, has granted Ghana Commercial Bank, Ghana Limited, authorization to issue electronic money, similar to what is popularly known as mobile money. In its issuance of electronic money, GCB Bank would create electronic value backed by equivalent cash to provide customers with access to electronic wallets through unstructured supplementary service data channel. The bank's application APP, quick response code, that's the QR code, and automated teller machines. GCB Bank plans to leverage on its 189 branch network to offer its own agency banking services. In sum, the committee noted the synchronized growth slowdown across advanced economies and its potential spillover effects on emerging market and developing countries. In addition to subdued inflation, recent assessments indicate that the global economy is in a low-growth, low-interest rate environment. Major central banks have therefore shifted towards accommodative monetary policy stance, which will likely persist until signs of growth emerges or inflation pickup becomes evident. These developments have triggered favorable global financing conditions as investors search for yield in emerging market and frontier economies with strong fundamentals, underscoring the need to further consolidate the macroeconomic gains and to position the economy to benefit from the favorable external financing conditions. In the domestic economy, the indicators of economic activity are exhibiting strong trends. The bank's CIEA has shown steady growth alongside favorable business and consumer sentiments. GDP growth is projected at 7% at year-end, supported by expectations of increased production in the mining sectors and the continued implementation of growth-oriented government flagship projects. Private sector credit growth is rebounding and will support growth in the outlook. The external sector position remains strong. The trade account has recorded large surpluses for 2 consecutive years, with the first 3 quarters of 2019 following the same trend. This has contributed to further narrowing of the current account deficit and improved prospects for additional reserve buildup of about $1 billion by the end of the year. This should provide strong buffers to withstand external sector vulnerabilities in the year ahead. The strong external position and improved foreign inflows have supported the local currencies movements against the major trading currencies. Some relative stability was achieved in the third quarter on the back of inflows from the mining sector and remittances. The overall stance of 2019 budget was geared towards sustaining the consolidation process and growth. However, execution of the budget in the first 3 quarters of 2019 indicates some risks to the fiscal consolidation path, which was achieved over the past 2 years. Primarily, fiscal performance has been constrained by significant revenue underperformance, posing threats to the overall fiscal outturn. Realigning the fiscal deficit to end-year targets will require expenditure rationalization. This must be underpinned by value for money principles to create the necessary fiscal space to support government flagship projects. The latest forecast shows that inflation will remain within the target band over the forecast horizon, barring any unforeseen shocks. Inflation expectations derived from the surveys remain fairly anchored in single digits, and core inflation is expected to remain at low levels. In view of the committee's assessments, risks to the inflation outlook were broadly balanced. Therefore, the committee decided to maintain the policy rate at 16% while monitoring developments going forward. Additional policy measures. In addition to the assessment of macroeconomic conditions, the Monetary Policy Committee undertook a deep review of the bank sector's lending practices. Following the recapitalization of banks, a rebound and gradual pickup in credit extension by banks is taking place. To give impetus to stronger credit growth and facilitate the deepening of financial intermediation, the Monetary Policy Committee sought to better understand the factors that limit access to credit, inhibit the monetary policy transmission process, and the reasons for the high lending rates of universal banks. These factors have over the years acted to limit access to credit, kept cost of credit high to households and businesses, and pose challenges to the attainment of higher economic growth. Data presented to the committee revealed that factors such as high operating costs of banks stemming from operational inefficiencies, inadequate disclosures of the risk premium factors in the cost of credit determination, the existence of high NPLs, and government's appetite for domestic borrowing would all have to be addressed comprehensively to help lower lending rates and improve on the transmission of policy changes to the real economy in support of higher and robust economic activity. To be able to achieve this, the Bank of Ghana is, for a start, exploring a number of new prudential and market conduct regulatory measures to help foster more competition in the banking sector and, in the process, help to lower lending rates. 1. To further provide increased activity in the small and medium enterprise sector, the Bank of Ghana is setting aside 2% of bank's primary reserve to support targeted lending to SMEs as part of the enterprise credit scheme announced in the 2020 budget. These funds will be held at the Bank of Ghana and will be available to banks that participate in the scheme. To also support and strengthen the growth of credit to the private sector, the Bank of Ghana will explore the possibility of setting a minimum loan-to-deposit ratio to ensure that more deposits mobilized by banks are channeled to viable private sector projects. The Bank of Ghana will hold further consultations with the banking industry to determine the impact of such a regulatory measure, and if warranted, determine the level of such a ratio and appropriate monitoring and enforcement to promote effectiveness. The bank is putting in measures to reinforce the existing credit infrastructure by, among others, strengthening the enforcement of the credit bureau system and the proposed regulations to be made by Parliament pursuant to the Credit Reporting Act of 2007, that is Act 726, and further strengthen the collateral enforcement mechanism under a new Borrowers and Lenders Bill to improve the quality of loans made by banks as well as facilitate recovery of loans and collateral. The Bank of Ghana will be working closely with banks to ensure that banks do not pass on their operational inefficiencies and overhead costs to their clients. To do this, steps will be taken to align compensation with overall bank performance by linking it to clear parameters, including the quality of a bank's assets. Bank of Ghana will scrutinize compensation policies for chief executive officers and key management personnel, as well as board of directors of universal banks. To ensure transparency, banks will be required to publish value-added statements disclosing details of the compensation packages of key management personnel and board of directors separately from the total employee compensation. To further deepen transparency in the determination of lending rates, banks will be required to develop and publish a clear framework on the risk premium build-up that impacts individual borrowers' credit profiles. This is expected to provide borrowers with a more informed basis for negotiating lending rates with their banks and enhance transparency in the credit delivery process, as well as promote responsible credit behavior from borrowers. In an increasingly digitized environment, the Bank of Ghana has evaluated its role in a digital economy. The central bank is in discussion with stakeholders to explore a pilot project in the sandbox environment on central bank digital currency with the possibility of issuing the ECD in the near future. Thank you very much.
Thank you very much, Mr. Governor. It's question time, so please identify yourself and focus on the monetary policy issues raised. Thank you.
Suleiman Mustafaye, graphic. Governor, let me, express my heartfelt condolence to you on the loss of your dad, Mr. Joseph Addison. My question, over the years, I've observed that we've been recording trade surpluses, and this time we recorded a 1.68 billion trade surplus. But this, most of the time, has not reflected in our current account. And we've also observed that, we have huge domestic assets. For example, I know that Ghana is now the leading producer of gold, and we are second in cocoa production. Is there a plan to convert these domestic assets into our reserve so that when there is an outflow of investors, normally at the beginning of political cycles, we do not have that swings in our foreign reserves? Thank you.
Good afternoon. My name is George Yafe from Joy FM and Joy News on Multi TV. Quick one on the bit about the governors or the Bank of Ghana has always spoke about building up their reserves for, let me use the word, the rainy day. Do you think that looking at what has happened over the past few months, you may have to revise that said rainy day to intervene? Because if I look at your data, compared to the same period last year, 10.75 or 57 compared to 7, we've seen the rate depreciate faster than you thought. And we are getting into the Christmas festivity. Do you think that you might want to review that rainy day and up your interventions to try and stabilize things a little bit, or you will still be waiting for the rainy day, which might be the first quarter of next year when the pressure is up, dividend and all the rest are being sent out, and there'll be some sort of pressure on the Ghana cedi? Also, can we get some fine details on how the cost of this financial sector cleanup in terms of real expenditure? We see data about the finance minister saying that about 16 billion has been spent. You yourself has given some details of it in your economic data. Yet people are still complaining that they can get access to their funds. Is it because these are in bonds? And is something being done to, if I should use the layman, liquidate these bonds so that those who are out there can still get access to their money or not? And finally, Governor, on the bit about the SME lending, I don't know whether you still want to allow the forces of demand and supply to dictate when it comes to cost of credit, or you've gotten to that point where you believe that there should be a deliberate regulatory intervention. Thank you.
Good afternoon, sir. My name is Kester Crunching. I'm from Graphic. I was very happy to hear that tourism arrivals was a key driver of economic growth. I wanted to know if this has been the case over the years, or we are experiencing this because of the year of return celebration. I just want to understand if we have grown tourism to the point where it can actually drive economic growth, because statistics from last year indicates that there's been a lot of tourist arrivals in the country. The castles are receiving a lot of visitors. I mean, a growth of 30,000 tourists above last year. So I just wanted to know if we have grown to the point, we have developed our tourism industry to the point where it can be a key driver of economic growth.
Thank you very much, Jesse. De David Hutton, RFI. Bonjour, mon gouverneur, et mes sentiments pour le deuil. Le Banque du Ghana a publié l'extension de date pour février 28 2020 pour le banque rural et communal et leurs frais d'opération, comme les gros banques commerciaux. Est-ce que c'est vrai que l'extension est 2020, février 28, et combien de banques rurales et communales étaient accès, comme les gros banques commerciaux? Et deuxièmement, est-ce que le GCB est la seule banque qui s'occupe de mobile, l'argent de mobile? Est-ce qu'il y a d'autres banques proposées? Il y a plusieurs banques. Je ne sais pas si GCB c'est la seule banque. Thank you very much, my governor. The Bank of Ghana has published the extension, date extension for rural banks and commercial banks for February, 28th February 2020, for them to pay up their operational fees like the commercial banks. Now, please, is this true? And how many of the rural banks have been axed out of business? And is GCB the only bank allowed to operate electronic mobile money? Thank you, Maxi.
Well, thank you very much for interpreting your own questions and back into English. Yes, yeah. So let me start with Suleiman's question on the trade surplus, which I believe it's a pertinent observation, that we have been recording trade surpluses for 3 consecutive years, and that the current account deficit is still recording a deficit in that sense. It's important to know that until 3 years ago, even the trade account was in deficit. So that's an improvement, that we moved away from an environment in which we were recording deficit on the trade account to one where we are now recording surpluses. And essentially that is due to the oil exports, which we are beginning to, in a sense, see grow. So the question really is about the integration of that oil sector to our local economy and our ability to provide the services that industry requires, and therefore participate in the services to the oil industry. including even catering. I mean, you find that a lot of the oil rigs offshore, even the food that is taken on the rigs sometimes are imported. So until we reach, that stage where Ghanaians are able to participate in that industry, we would continue to see a weaker performance on the current account. So that really explains that issue. But you raised an important question of converting some of our domestic assets to revenue, and you classified gold as one of the domestic assets. And this is something that the Bank of Ghana is beginning to look at. And we are in discussions with some of the gold buying agencies, the local aggregators, with a plan to buy some of that gold locally and have it refined in order to enhance the bank's foreign exchange reserves. So that is an initiative that the bank has already started, and we would evaluate how effective that will be. Then I move on to the question from George Yafi on the issue of the build-up. Because if you've seen the developments on the global economy and the way emerging market currencies have moved this last third quarter of the year, you just have to go and look at the data on what has happened in Turkey, in Zambia, in South Africa, and some of the Latin American countries. And there's been a lot of pressure on emerging market currencies. And Ghana has, in a sense, been relatively stable. So that is because of the work that the Bank of Ghana has done over the last quarter of the year. So the rainy day is now. I agree with you. The rainy day is now. And we probably would have built more reserves than we have currently built, were it not for the fact that we have been in the market quite significantly in the third quarter of the year to moderate the pace of depreciation of the currency. Now, on the issue of the cleanup of the financial sector, yes, I think the numbers have been put out there. The amount that has been issued in the form of bonds, 14 billion, I think, was the last, 11.2 billion. But you want to add other costs, including our own costs, some of the receivership costs that the Bank of Ghana has borne. I think the trouble that we currently have has to do with the fact that all depositors were made whole in the case of the banks, but we have had to operate with caps for the SDIs. And as you're aware, we have a cap of 20,000 per account. This is really the source of the noise that you're hearing about people not getting access to their funds. It's not because they are not getting access to their account, it's because there's a cap on payments limited up to 20,000. I should tell you that more than 95% of total deposits have been covered, below this cap. More than 95% of depositors have had their deposits fully refunded to them. So there is just about a 5% of depositors who are holding very significant amounts of money, and that have been, in a sense, caught under this cap. And unfortunately, those are the louder ones, and therefore, that's why you keep hearing that people are not getting access to their funds. But most people have had access to their full funds. At the end of the day, it's a question of the amount of resources that the government can afford to put up front. And the hope is that the receiver would be able to recover these funds from the shareholders and directors. That's the job of the receiver. So it is expected that at the end of that receivership process, those amounts that have not yet been paid would be taken care of by the proceeds that the receiver is able to generate. And therefore, his job is very important, that recovery job of the receiver, chasing loan defaulters, chasing shareholders that have misdirected funds. Is critical to meeting depositor full payments. And we must all give the receiver the necessary support to achieve that objective. On SME lending, as you heard, we had agreed to set aside 2% of the primary reserve of banks. Banks are keeping 10% of their deposit in reserves with the Bank of Ghana. We think we have reached the point where we can set aside 2% of those reserves, but they will not be available to the bank to use anyhow. Rather, if a bank is ready to identify a project directed as SMEs, that bank will be given access to 2% of their reserve requirements with the central bank. I don't know how you characterize that, whether it's market-oriented or more direct intervention. You tell me how to characterize that. But this is a deliberate effort by the central bank to support the SME lending. Tourism arrivals, yes, we have seen tourism arrivals increase. This is not the first time. It's been a major source of activity in this country. I was following data on tourism arrivals as far back when I was director of research. We did a whole research, I think it was published. We did the whole research on tourism arrivals in Ghana and its impact for hotel occupancy rates and all of that. So yes, I think this year we are beginning to see higher numbers, 30,000. It adds up to keeping the economy as robust as can be. But I don't think we have reached our full potential yet. You just have to look at our coastline. When you go to other Francophone countries, what do they do with their coastline? That's where you see the tourists, you know, nice hotels, nice restaurants. Go to Dakar and you will see it. Come to Accra and you can see what our coastlines are used for. So we need to develop our tourist potentials even further. Thank you. The question about RCBs. Yes, I think the deadline for the capital requirement was extended somewhat. But as I had said earlier on, we excluded the RCBs from this initial phase with the view that we would be working with the Association of Rural Banks and the Apex Bank to review that whole area of rural and community banks and strengthen them going forward. So yes, and then so far GCB is the only commercial bank that has been given this license for electronic money under the new Payments and Services Act. Thank you.
Hello, my name is Etonam. I report for TV3 and 3FM. So there are concerns about the fact that government is walking a tightrope for 2020 and the fact that there's a likelihood of a fiscal slippage. That's because consistently for the past 3 years we have missed revenue targets, and the fact that if you look at the Fiscal Responsibility Act, for a given year we can't spend more than 5% of our revenue. And if you also look at the fact that the deficit target for 2019, unlike 2020 looks a bit narrow, because for 2019 we started with a deficit target of 4.2. Mid-year budgets we increased it to 4.5, and we are starting 2020 with 4.7, and so we have a margin of 0.3%. And so there are concerns that, and given the fact that it's an election year and we have a revenue target of 67 billion cedis for 2020, My question, Governor, is that what are we doing to ensure that we don't run a deficit which is higher than or above what we have been given with the Fiscal Responsibility Act, especially the fact that we are in an election year? Thank you.
Okay, my name is Emmanuel Bruce from Graphic Business. The governor outlined some measures which are meant to boost credit to the private sector and then SMEs. I want to find out when these measures will be rolled out, and also if he can give us updates on the recovery rate of the receiver in terms of loans.
Thank you very much. The name is Justice Adoboy. I work for the Shinhua News Agency. Let me start by wishing you my heartfelt condolence on the demise of your father. May he rest in perfect peace. Now, secondly also, we were expecting some explanation. I would not want to be too hard on you today because we are mourning, but we were expecting a little explanation as to why we were starting a bit late. It doesn't happen, so when it happens, we wanted to hear some explanation. Are you his spokesperson? Okay. Thank you very much. A few things I would like to find out. The electronic money payment that GCB is being licensed to do, is it moving us close to Bitcoin? I would like to know that. Now, secondly, you announced that you are going to start forward trading in the forex market from beginning of October. I would like to know how it has fared so far and how that fed into the answer you've given for George Wiafe's question. And then thirdly, there is a concern about forex trading institutions which mostly operate online and have been doing business with people. Now, recently when I checked on your website, a number of them are not listed there as as licensed forex traders in the country, yet they do businesses with people both here and outside. Indeed, you have some of them that are not based in Ghana, yet they do business with people here, and at the end of the day, you begin to hear people cry, their monies have been taken away and so on. Has that come to your notice? Are there any measures to be able to check those maybe fake or unlicensed forex institutions? Thank you.
My name is Joshua from Go Street Business. I would like to know for October and November, we're expecting $100 million to be pumped into the forex market. So far, how much have been pumped into the FX market?
Thank you. All right, then. Hello, go ahead.
Thank you very much. Good afternoon, Mr. Governor. My name is Elom. I write for Economy Times newspaper. My first question has to do with the 2% primary reserve that I wanted to set aside for. I just want to know how much in monetary terms will you be unlocking for lending to support the private sector for when we do the arithmetic for the 23 banks. My second question has to do with, when you look at our debt to GDP ratio, it's now 60%, 60.3% to GDP. But the IMF is projecting that we're going to end the year by 63% to GDP. Is that what's going to happen? My last question has to do with the recent deposit insurance scheme that you launched. I just want to know, when is it going to cover the mobile money operators? Because what they did was to the banks. When are we expecting to extend the same insurance to the mobile money operators? Thank you.
For those questions, let me start with Etonam and the question on the fiscal issues. I think you are really worried, similar to other investors, on fiscal performance. And as a country, we do not have the track record of sticking to our fiscal targets over the years. And, that creates a bit of uncertainty. So this is really the unfortunate situation that the economy faces, that we get this cloud of uncertainty around election years. And I think that the authorities are fairly committed this time around to ensure that that does not happen. And I tell you, we would need 3 or 4 more election years where we go through the cycle with the fiscal intact in order to gain that credibility from investors broadly as to establishing that credibility in the market about fiscal policy. So I understand the point that you're saying. I can only assure you that the authorities are committed to ensure that we go through this election cycle without that sort of, spillover. Yes, at 4.7, we are quite close to the 5% ceiling on the target. But that's the commitment that they have made, and we expect that commitment would be stuck to. As I said, if you listen carefully to the statement of the monetary policy press, we had said that given the time that we have left to the end of this year, a lot of the effort would have to be on expenditure rationalization. So it makes the work easier when you focus on identifying your priorities in terms of spending, because the revenue part of it is more difficult to increase over a relatively short time. Similarly, I mean, in 2020, we would have to try to re-examine the expenditure, profile and identify the important priorities in order to stay within the revenue envelope. And I know that this exercise has been done. I mean, we all went, into a retreat before the budget to do this type of reprioritization. And therefore, I'm more confident that we would stick to those targets in 2020. Then the question about the effectiveness of measures, credit measures that we are announcing, I believe that's the question. Yes, we would expect that it should make resources available. The estimate is around 2 billion cedis. Hopefully that would make a difference if all of that amount of resources are directed towards SME. And then I have a question here on the late start. Yes, you would see that we devoted quite a bit of time on the lending issue on SMEs, quite apart from the monetary policy decision of positioning the policy rate. So we had to go into a whole section on credit, and that obviously requires more diligent review before we release that to the public. So that accounts for the late start today, and we apologize for that. We will not keep you here waiting in the next time. Now, on electronic money and GCB, is it a cryptocurrency, Bitcoin? No, it is not. It's just electronic money backed by currency. So GCB cannot create money. They are only having an electronic representation of the cedis that Bank of Ghana puts into circulation. So it is not crypto. The question on forward trading of the cedi, I think the concept is very clear that we are in an environment in which businessmen, in anticipation of future payments, would rather go to the market now and buy foreign exchange because they have some future payments in foreign exchange. And they put a lot of pressure on the spot markets for the currency. So really, the forward market is to cater for those future requirements so that you can go ahead and buy the FX for a future date, and therefore remove the pressure from the spot market. This is the idea. And it seems to be working because there's quite a bit of interest in that market. We are seeing very good bids coming in. We are looking at 3 weeks, 4 weeks, and we are extending the profile of the, duration of the rates that are being quoted in that market. I think it has also helped lift the pressure of the spot market. That also probably contributed to some of the stability that we have seen. This issue of online traders of foreign currency, Bank of Ghana has been on top of it. We have issued several notices. Our Financial Stability Department has been chasing up on this issue, and we would the best that we can do is to continue to warn the public, and those that come to our attention, we try to follow that up. But I will be surprised if after all that we have gone through as a country, people would still deal with unauthorized dealers of foreign, exchange and even unauthorized, schemes. That would really surprise me, but we can only do our best to follow up on leads and give notices to the public when we get notice of such operations. And I think we have been effective so far in doing that. There was a question on liquidity that has come in. I think you're referring to the cocoa loan that was supposed to come in this last quarter of the year. And I think the bank has received 2 tranches of that cocoa loan, maybe around 700 or so almost $1 billion, right, of the cocoa loan has already come in. Question on GDP, debt to GDP ratio. IMF projecting 63% of GDP. We have 60% of GDP. And as you know, there are a lot of assumptions behind these types of projections. Assumptions on interest rates, assumptions on exchange rates. All of those things feed into the final ratio that you would get. And also, even in terms of the fiscal performance over the period, the size of the primary surplus. There are so many factors that go into those types of projections. But we will stick to our 60% of GDP projection. Now, on the receivership, I hear we have recovered over 1 billion cedis to date. And our Momo deposits are covered by the Ghana Deposit Protection Corporation already. So all the Momo deposits are covered under the current insurance arrangements. And the receiver has recovered more than 1 billion cedis to date. Obviously, there is still more work to be done. He has a loan portfolio of over 10 billion cedis. If he has only done 1 billion, he has more than 9 billion out there to go after. Two receivers. But apart from the loan portfolio, he has other assets that he needs to go after. And then we will be able to meet all the depositor payments that are due. Thank you.
Okay, thank you. My name is Lawrence Segbefia from CTFM. You mentioned that you are going to scrutinize the compensation packages of CEOs and then boards. Is this something new? And then how are you going to do it? Would it be based on size of the bank or the income of the bank?
Thank you, Governor. My condolences too to you. Governor, you said early on that the monetary stance was sufficient, and on the back that inflation is still going to really trend within the targets. But tell me, how do we get that extra 1 billion that you anticipate to boost your reserves? Where is it coming from? And then my other issue is like the off budget or off the balance sheet expenditure. I'm talking about the billions that we are supposed to be spending to save depositors' funds and the banking sector cleanup. How do we couch it? How do we capture it in the scheme of things, given that if the IMF's rules were to be applied, that is really going to blow our deficit beyond the roofs? Help me with some education here. Thank you.
Okay, so I think, is that it?
I asked the question on when the measures to boost the credit to private sector, the SME, when is it going to be rolled out?
Yes, that was the first question that came. I mean, this is almost immediately. I mean, this is effective, this MPC. So we expect that these measures would be effective almost immediately. And then let me address this issue on the below-the-line treatment of financial sector bailouts and energy costs. I think that some of these decisions are taken on the basis of the analytical work that is being done. First, under the IMF program, we're assessing fiscal performance. The question is, do you want to make that fiscal assessment including financial sector bailout issues or energy sector bailout issues? This was the discussion. And we had argued that, no, we want to assess the fiscal excluding these factors because they were inherited. These are legacy issues that the government more or less was settled with. So in assessing fiscal performance, you don't want to add legacy issues. But they are real. I mean, these financial sector issues are real. These energy sector issues are real, and they are not short-term. It's becoming more permanent. So we are looking at, in future, looking at it more holistically, because they are not going to go away overnight. And therefore, in setting the fiscal policy, one has to take note of these more permanent problem areas that the country more or less faces. So yes, that was a temporary decision that was taken just to be able to have a benchmark for assessing fiscal performance. Now, your question on the monetary policy stance. And I think it's also, in a sense, a question on the fiscal policy stance. And the question is a critical one because we are saying that so far the stance is appropriate because the deficit ratios that we have seen of 4% and the monetary policy rate of 16% is giving us inflation which is close to our medium-term target and is giving us robust growth, and we are accumulating reserves. This is what makes the stance appropriate. I mean, if we were losing reserves, that would not be a sustainable fiscal or monetary policy stance. So yes, this is the circumstance under which we are accumulating $1 billion more dollars in reserves. If we had an expansionary fiscal stance, on the other hand, a higher than 5% fiscal stance, we could be losing reserves. Or if we had an interest rate that was lower than 16%, if it's not appropriate, we would be losing reserves. So all these variables are interrelated. So this is why we are saying that we have an appropriate fiscal stance, we have a sustainable growth, inflation is within medium-term targets, and the country is accumulating reserves. last question that I'm going to deal with has to do with the compensation question. As you can see, this is a recent decision. We have looked at the operational costs of the bank. If you look at the cost of operations of the banks, you see where the inefficiencies are coming from. And we think that it's about time that we sat down and had a conversation, ensure that, chief executives that are, reporting all these high non-performing loans are not being compensated in excess of some of the results that they are achieving, just to bring some equity into the system. So this is really very early days yet, but it's an idea that we have thrown out as part of our processes. After every MPC, we have a meeting with the Ghana Association of Banks, and I believe we will be meeting them on Wednesday. So we will go through the details of all of this with the stakeholders. Thank you.